Welcome, everybody, for yet another episode of Views. We are back again with an amazing guest. But before we introduce the guest, got to bring on my co-host.
Nate.
Oh, what's going on, brother Joel?
Look who we have.
Oh, my goodness. How are we doing today, guys?
Oh, we're rocking and rolling. We've had a long day, been on a couple tours, been all over the world. It's been exciting. What do you got going on?
Man, dude, so I'm actually flying out because for some reason I got to come see you guys. We got a big day tomorrow. So, I'm running late because I had to get a haircut. Because I was like, I am not going out in public without a haircut because you guys are going to be like, you look homeless. Go home. And it just would have been bad. So, that's what I've got going on. I'm extremely late, but we're here. We're getting it done. Man, it's awesome to see you guys.
Likewise. Well, stoked to be here. Hey, I know we're going to jump through a couple housekeeping items before we run into the interview. So first, please leave us rating review. As always, helps us grow, helps us teach others. Second, please subscribe so you don't miss an episode. And third, as always, buckle up. It's going to be a hell of a ride. Side note, if you hear any noises in the background, there's just some pups running around. So let us know.
Awesome. I love it. All right. So today we're going to be talking to Anthony. Let me go ahead and bring him on right now. Mr. Peters, come on stage. Welcome in. How we doing?
Good. How are you guys doing tonight?
Excellent.
We're doing good. We're here. We made it.
Yeah, doing great.
Awesome. So, question for you. Know it's your first time on our show. Hopefully it's not your last. But tell us a little bit about yourself. What got you here? What brought you here? Why real estate?
It kind of started how many people who find real estate read the book, Rich Dad, Poor Dad. Got me turned on to real estate. Started reading some more, doing some research after that. And originally I had a plan to go into single family. I was going to do long-term buy holds, do the BRRRR method. And so for my current job, I'm active duty military. So it's like what I kind of call your standard military investor is kind of, they build out through their 20 years up till they retire. They buy one house every 1 to 2 years. By the time they get out, get their 20-year pension, and they have, 10, 15 properties. It's a nice, comfortable style. And after I had kids, I kind of ran into that I didn't want to stay in for 20 years. And so I started looking at how's the fastest way to scale. And I found out that multifamily, reading some books, multifamily was it. That was the vehicle, the tool that was going to get me there the fastest and how I could scale. And that's kind of what led me into the multifamily realm.
That's awesome. So tell us more. So you're in multifamily. Do you focus on any other asset class? And if not, you kind of mentioned why you love multifamily, but give us some more details on what makes it scalable and what attracted you to that specifically.
Yeah. So other than multifamily, I'm also into short-term rentals as well. I have one short-term rental down in Florida. But my main focus I like is multifamily. So for my tool was, doing long-term rentals requires a lot of capital out of my pocket. And it was going to take a long time to do. And when I found, through the syndication model that you have the ability to run and operate properties, which is what I'm good at, then you can raise money from investors and you don't have to front, the capital. You can get into these large properties. That was the most appealing thing to me for syndications and multifamily.
Dude, I love that. I mean, you hit the nail right on the head. I mean, especially trying to jump in and after reading the book and learning that you can use OPM, for those that are watching that might not know, other people's money to be able to help fund and propel and kind of leverage yourself to be able to move forward. I mean, that to me, that was a light bulb. I mean, it was life-changing when I figured that part of it out. One follow-up question for that one. coming in and not knowing much about real estate, and after reading the book, what kind of challenges did you face, especially after you began to scale? You mentioned that you got maybe short-term rental in Florida, but now that you're going into these larger portfolios and some of these larger projects, tell me a little bit about some of the horror stories.
Yeah. So how it started was I noticed a trend through all the books I read, whether someone came out and directly said it or alluded to it. I found that I needed a mentor. That was something that was kind of clearly written out. So when I was kind of in like my incubation phase, you know, doing all the research, listening to every podcast I could, listening to audiobooks, reading books. I swear for the first 6 months to a year, any bit of free time I had, I lived education for multifamily. If I had a free moment to think, I was thinking about multifamily. I was doing all the education. And then I identified someone who wasn't crazy far ahead of me for a mentor. I found someone who had been doing it for about 2 years and was starting to scale fast. But he wasn't so far ahead that he forgot what it was like to start out. So for me, it was kind of the perfect fit of he still remembered those struggles at the beginning. And I joined the mentorship group and met my current partners for my syndication in that mastermind. And that's kind of how it all started. Was in that group, we found our first property. It was a 27 unit portfolio. Actually, it started off larger. I think it was 56. It was amongst 3 properties. And through the due diligence, we ended up dropping out one of the properties that was about half of the size because it had some structural issues and some things that we just didn't want to get into. So we ended up amending the contract and sticking with the 27 amongst the 2 properties. And that's kind of how tackled the first deal.
That's amazing. And there's something you brought up there that is so near and dear, especially to all of us. It's just the mentor piece. And we're all in different mentorship programs. We're all in different coaching programs. And it's funny because that's how we all met, through one or another. And it's just such an important piece that I think is critical to, I don't say critical to success, but really, makes things a lot faster, expedites it. So I love that. Curious though, you said you're in the syndication model, and we love that. We're doing the same kind of world, but how do you fund things? What is your traditional financing model? Do you raise everything private completely by cash? Do you do, bridge? Do you do standard? What does that look like?
So that's going to change deal to deal. So this specific deal, we raised 100% from investors and then took on bridge debt as well. Well, so I guess we raised the down payment for the property to be able to close from investors, and the funding for the rehab is bridge debt. So that's being funded by a bank.
Awesome. And I agree. It's always property specific. So makes sense.
Yeah. Yeah. But traditionally so right now, kind of with how the markets are going, the properties that I'm looking at now, I'm trying to stay away from bridge debt if I can, and look for assets that are a little bit more stabilized, something that's going to meet your 90 for 90 criteria, possibly get agency debt on it or something like that. Something a little more stabilized just because of where interest rates are. In the last week or two, there's actually been talks of interest rates coming down in 2024. And in the single family realm, you're actually starting to see, interest rates drop by 50 basis points or so in the last week. But right now, my strategy is still kind of to find something that's a little more stabilized until we kind of let the market level out and see where things are going.
I am looking forward to the day that those rates drop. Just putting that out there. Just want to lay that out. Just my 2 cents. Now, I know you talked about deal specific, and I agree wholeheartedly. I mean, things are going to change, rather be bridge, rather be agents, doesn't matter. Either way, how do you go about finding the proper and right market for you and your team to invest in? And when you look at a market, how do you go about analyzing it to make sure that it's actually, I don't know if it's going to be forced appreciation or you're looking towards steady growth? Or tell me a little bit about some of that process behind it, and maybe a little bit a quick overview on maybe just some thoughts on your underwriting and what goes into it.
Yeah, so I'm definitely not the underwriting master. I'm fairly good at underwriting. So things I'm looking for is markets that I know and that I've done a good amount of research on, or if a property gets brought to me in a market that I'm not as familiar with, knowing that I have someone that is familiar with that market that can kind of get that ground truth from. If no one within my network knows anything about that specific area, then I'm still going to analyze it, but I'm probably going to shy away from it a little bit if I can't get some ground truth to it. But kind of going into, looking into census, reports for the area, kind of looking at job growth, what distributors or manufacturers are coming to the area, how many people over the past couple of years are moving to or from those areas are big things that I look for. One of the markets we focus on is Charlotte. And the thing that I like about that is that's a market that you really need to be in tune with, because you can go 5 minutes down the road and it's going to be completely different numbers that you're going to need to underwrite to. So kind of knowing that market and knowing, street by street, area by area, intimately of how these numbers work is going to be a huge factor into underwriting. And then right now, one of the biggest things I'm kind of seeing is just like where people are failing with underwriting is coming in way too low on either, decompression of cap rates, refinance of not knowing where interest rates are going to be and making assumptions that may get them into trouble if they get on bridge debt, and insurance rates. Over the past, 2 years, we've seen insurance rates skyrocket, and we've seen some deals that actually end up failing because people didn't account for insurance rate increases.
I love that. So many different pieces. I think you're right about the underwriting. It's definitely been a interesting game lately. I think taxes are interesting as always. Like you said, insurance has been like the Wild West lately. And we play around the Charlotte market as well. And I completely agree. It's interesting. It's definitely kind of area by area. And it's funny because that ties nicely to our next question related to risk. And speaking of the devil, we looked at this property today and it's pretty heavy negative leverage. It's super unstabilized and it needs just about everything you can think of. But the picture is, the vision is beautiful. Where it could go is very well worth it. So we're managing our risk in its own right, but how do you manage your risk? How do you manage whether a property is worth it, or how to protect your investors' capital, whatever it may be?
Yeah, so that's something, value add and heavy value add is something that I really like, especially as, someone who's newer to the multifamily realm. Those are the properties that I look for. So inherently that risk is going to come with the value add properties. And where I, kind of leverage on that is just being able to, really pay attention to your balance sheet and make sure that you have the funding available to back it. If you know that you're going to be negative on cash flow for the first year, up front, doing a raise of some more money to put in reserves to keep you afloat for that first year until you get that heavy turn done, get your tenant base changed, and really start moving in the right direction. Joao can attest to, the property we have right now ended up being a little heavier turn than we initially anticipated. And we had to deal with a lot of evictions in the turnover of property management. And at one point we dipped below 50% occupancy, which was something that we did not underwrite to. And if we didn't have the proper reserves for that property, we could have that could have been really bad. We could have ended up having to do a capital call or losing investors' money. But because we had, money raised for that first year to get us afloat, it allowed us to, we took it as an opportunity of, we got Joao's crew in there. And we're like, hey, we got a bunch of vacant units. Let's turn them all right now. Instead of, doing one at a time, get someone in. Let's take this opportunity, gut the ones that needed to be gutted, do this heavy turn. We took it as an opportunity of like, hey, this is how we're going to, re-image this place of, we're going to clean it up. And now instead of 1 or 2 units looking nice, we have 50+% of this property is nice. And then now we're turning the other units as they come vacant.
So much insight there. That's incredible. Wise words.
I love that. I mean, it's remarkable. I mean, and it takes a strong individual and an even stronger team to be able to try to find those things. Example, you were talking about dipping below the 50%, and instead of just saying, oh, snap, everybody's gone, what are we going to do? There's less money coming in. You're like, hey, let's look at this from another side, kind of a paradigm shift kind of situation. We know we've got folks that can do construction. If we've got all these vacancies, let's just go ahead and turn all these units all at once, get them up and running, and then all of a sudden we're going to bounce back tenfold. That's amazing. 10x is greater than 2x. I love that. That's awesome.
Exactly. Yeah.
So, personal opinion, how do you feel about the real estate market? What's exciting you now? What kind of future outlooks are you seeing? I know we talked a little bit about some of the interest rates maybe coming down. Any new things or any cool things that you're seeing in your insight, or any cool new views that that kind of excite you?
Yeah. So, it's a little bit of a negative thing in the market, but something that excites me is, you look at over how the market has shifted since COVID, 2021, 2020 era, where a lot of people were entering into multifamily because it was kind of the shiny object of, you'd come in, everyone was getting forced appreciation, a monkey could run a property and you could sell it in 2 years and make a couple $1 million. That just seemed how it kind of was at that time. Whereas now we've seen with the market shift, you actually need people who did proper underwriting and had the proper business strategy in place for how to turn these units. And we're coming up on the end of people have already filed for their 1-year extension on their bridge debt, or are at the end and who don't know how to run properties. And honestly, we're probably not at a point that they should have jumped into multifamily. And I think you're going to see a lot of properties go on sale at a heavy discount in this coming year, and a lot of them are going to either be from just changing operations and operating the properties properly, and that's going to give you appreciation, or doing the proper levels of maintenance and turning the properties and budgeting. So that's what I'm excited for in this coming years. I think there's going to be a lot of opportunities coming for people who are actually knowing what they're doing.
That's awesome. That's awesome. And real fast, before we jump into our last segment, I want to tap into something you said there, because I think it's interesting. You said when somebody may not be ready to jump in a large multi. And I think that's a really good point, because at some points, somebody might not be ready for the jump. It might be over their head and they might be getting in, too far, too fast. So when do you think it is a good time to transition into that? Or what do you think would qualify somebody in some manner that they're ready?
So I kind of put that into stepping back to the mentor piece of having someone who you have to rely on. I mean, our property in Charlotte, we've seen, this was like a Murphy's Law property. We've seen anything that could possibly go wrong has gone wrong over this past year. But because our group has great mentors and they're there for us and they're on this deal with us, they're letting us run the deal, but they're that backstop of, if anything were to, when things start to really go wrong, then they're going to jump in and be like, hey, let's do this. Let's start doing these things. Whereas people who are just kind of hopping in that may not have had a good mentor or any mentor at all aren't going to see that. So for me personally, that's kind of what I think prepares you, is having someone to lean on, because that mentor, you chose them for a reason. they have the experience. So instead of you figuring it out on your own for the first time, you have someone who can answer those questions for you and guide you through those situations.
So much knowledge, so much insight. And I am a huge advocate of pick up a book, read, listen to an audio, but then get around people with the same kind of mindset. You need to surround yourself with those that you can bounce ideas off of. Find yourself a mentor. One of the cool things I was talking actually with a group last week. They were like, Nate, you paid X amount of dollars for this. Why'd you pay X amount of dollars for a mastermind? I'm like, look, I paid this money so I can learn the mistakes that they did. So I'm not paying hundreds of thousands of dollars down the road. And they can help guide me and steer me. So this way I can continue to make the right decisions. So hats off to you. I agree 1,000,000,000%. So thank you for sharing that.
Yeah, absolutely.
All right, real quick. Excited to jump into our last piece of this. We call it the point of view questions. We ask these to every guest. You can do quick answers. You can do long answers, whatever you want. But we'll get going, Nate. Ready to cue the music?
All right.
Music.
Let's do it.
Is on.
No
pressure.
What separates top performing real estate investors from the rest of the crowd?
Education and your network. It is a phrase that's thrown around of your network is your net worth, but getting into those small rooms with people who are doing the same thing as you, that is what's going to separate you or separate a real estate investor from someone who's going to fail. Always having, that backstop or someone you can lean on of, if it's not someone in my direct, GP group on this deal, I have a network of, sophisticated investors and sophisticated operators that I can reach out to. And I think that's what makes someone truly successful.
Love that.
Love it. What's a daily habit that's contributed to your success?
I'd say discipline. So for me, it's, setting a schedule and having the reps of doing things repeatedly of, if we all have, extremely busy lives, but if it's, waking up an hour early to continue your education and read, or at the end of the night, get on and continue to underwrite properties, even if you know they're not good, just to exercise that muscle and continue to go.
So good. What is a piece of advice that you would give to your younger self if you were starting again?
Start earlier. I wish, I would have known, assets before liabilities through my 20s, because I'd probably be sitting in a completely different situation right now. And I wish I would have, been able to start earlier.
What is your favorite real estate or business book?
I'm gonna have to go with Who Not How. It speaks to, I may not be the expert in every area, but knowing when to find that person who is going to be that expert, who can do that, to free up my time to do the things that I am good at.
Love that. Have you read 10X is Easier Than 2X by the same guys?
That is on my list. I haven't read that one yet, though.
So good. My favorite. All right, last question here for you, and then we'll wrap up. What is the biggest non-monetary benefit that you've gotten from real estate investing?
Honestly, it makes me happy. It is something that I enjoy. So kind of in my background, I skipped over at the beginning. So one of the ways I also found that I love real estate was my wife and I bought our first house in 2015. And a year and a half later, we moved into another house. And then 3 years later, we bought another house. And it was just, I kind of found a passion that I liked real estate, and I liked the hunt of looking at properties and stuff like that. In fact, my wife was like, "Hey, no, like stop. I'm done moving. If you want to do this as like a hobby and go buy other houses for rentals or something, go do it. But we're not moving our family anymore." But for me, I mean, looking at properties on Realtor.com, LoopNet, or ones that brokers sent me, and going out and seeing properties and seeing the transformation of properties, that generally makes me happy. Like, it's not just a business thing; it's also a hobby. It's something I enjoy.
Love it, love it, love it. I'm going to pause the music because you have made it through the POV. Awesome job. Loved it all. Truly phenomenal having you on our show, getting the opportunity to talk, hearing, especially now, even at the end, kind of your start and moving and transitioning and learning to be able to have that kind of willpower to connect with other like-minded individuals, like we were talking about a little bit earlier, joining mastermind groups and learning to be able to scale, and then learning how to pivot when necessary to be able to capitalize on where other people would maybe call it a shortcoming. You're like, you know what? This is actually going to be an opportunity. We're going to go ahead and push through. So hats off to you. I also want to bring Joao on real quick. I kind of want to hear a little bit of his insight on it. I know the two of you have worked together before as well. So Joao, come on up to the front, brother.
How's it going, man? So wasn't prepared for this. I mean, I don't know what to ask or say. I'm thankful for working with Anthony. We met a few times, took me out and sat with me, talked to me, showed me, taught me so much. It was just crazy, out of the kindness of his heart, and just pushed me to be better, gave me higher standards, higher outcome, and just was there to tell me, text me, call me, email me, whatever you got to do. Let's get through this. Let's work through it together. How can we get better every single time? And Anthony went from being, not a vendor, partner, or a boss as much as a friend now, and also pushing me and giving me advice of how to get better overall, how to grow myself, how to scale myself, and how to shift my mindset from being a vendor to moving down to a partner and how to scale up. And I just can't thank you enough for that. I mean, you, and I'm probably throwing out names, Dennis, David, like you guys took something you didn't have to do at all and tried to help better myself and my team, and just held us to a higher standard and said, this is what we want. This is the model, and the value add you bring into everything is amazing. And I can't thank you enough for that, man.
Oh, dude, thank you, Joao. I mean, we wouldn't have been able to get through this last year with these properties without you. You guys have saved us. You've been. I'm glad we found you from the beginning, because having someone that you can trust with working on the properties and stuff like that it's paramount. We wouldn't be at the position we are now if it wasn't for you and your crews, man.
I appreciate that. I mean, and Anthony, I don't want to go too deep into it. Anthony has a construction background as well, so he knows what's going on, how to do things, everything. It was just so breath of fresh air. We can't do three without doing one. Anthony's done it himself as well, so he knows what it takes, and that was just a big difference there.
Dude, I love it. I love it. And one question that Joao actually brought to our attention, we did an interview with Joao a while back. Check out that episode as well. And you'll hear it on the end. But Anthony, quick question for you. For those that are watching, those that are listening on the podcast side of things, if they're newer investors, what information or what kind of piece of knowledge would you like to instill in them?
I mean,
you can thank Joao for that question.
You just got to take the leap and start. You got to educate yourself, and you got to take action. Education only gets you so far. You can sit there and educate yourself and listen to every podcast, read every book, analyze every deal. But until you actually take that jump and go in, you're not going to see any changes. Because there were a lot of, I don't know if I'd say misconceptions, but there are a lot of things that I thought I knew because I had read so much until I came in and started doing, some rehabs on some properties. And it kind of was like, Joao and I talking, and, it was like, oh, I kind of read this in a book, but I'm like, just what I know about, fixing up properties. I'm like, that doesn't make sense. Like, let's go this way. This needs to be done. This needs to be done. And just kind of trust in your gut instincts on feelings that, like if you're going in on a property and you start, you're doing a walkthrough and you're like, this doesn't seem right, or this doesn't look right. You're like, go with that gut feeling. Because usually you're getting that feeling for a reason.
So good. I absolutely love that last tip. It is paramount. There's things that we have been in situations with where we almost went forward with the building, felt weird, backed out, mysteriously caught on fire 2 weeks later. And it's just so funny how that stuff works. So
I remember that one.
Oh, I'll never forget that. Anthony, thank you so much for your time on here. Your story is amazing. Hearing your wise words is amazing. I'm absolutely looking forward to hopefully having you back one of these days and just learning more about you and continuing the conversation.
Yeah, Nate, Cole, Joao, you guys, thank you for having me on. It's been a pleasure. It's been awesome.
Pleasure is ours. Well, thank you so much. Everybody that's listening, get home safely. Everybody have a great night. We'll see you on the next episode. Peace.